market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, China has pledged to fight to the end on tariffs, raising the risk of a prolonged trade war between the world's two largest economies. Now, this comes after Donald Trump vowed to slap additional 50% import taxes on Beijing unless it withdraws its retaliation against his earlier levies. The U.S. president says he's not pausing his tariff plans.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals, and in certain cases they're going to be paying substantial tariffs.
Now, for more, let's bring in Bloomberg's Brendan Murray, who leads our trade coverage, and Wei Li, Global Chief Investment Strategist at Blackrock. So thank you both for joining us. I'm sure everyone has had quite a week so far, and we're only Tuesday. Wei, there seems to be, the markets are a little bit cooler, certainly, than what they saw in the last couple of days. Is it because they think they're buying opportunities, or they're just a bit more in a wait-and-see situation, given things are moving very fast?
It's always fun to come on Bloomberg after a day like yesterday, where S&P was jumping 7% on fake news, and 10-year yields was swinging to the tune of 30 basis points per day within the day, right? Like, it's really a remarkably volatile environment right now. Typically, a market drawdown of 20% is when investors jumping across the board to buy, but we don't think this time is it. Maybe it could be, but we're not sure. What we're seeing right now is very elevated uncertainty. There's lots of moving parts, and it's impossible to have clarity beyond the very near term. But even in the near term, it's hard to have clarity. So we're shortening our tactical investment horizon to just look at kind of the huge amount of uncertainty warranting greater risk premium right now. But the big picture of slightly longer term, the story of U.S. fundamentals still holding up, that hasn't changed. But right now we're hunkering down in the face of extreme uncertainty. Yeah,
and Brendan, I mean, the problem is, and I've read a million copies and saying, like, look, we'll have tariffs for 5 years. Actually, no, this will end really soon. What we know is that China is probably the one with the fight in saying, look, they're fighting to the end on tariffs. And, of course, that's supporting a bit of the markets.
Yeah, exactly. So what we have here is essentially a game of chicken going on between the world's two largest economies. President Trump came out yesterday, sounded, pretty upset that China had retaliated and threatened 50% in addition. That a lot of economists would say would more or less bring the trading relationship to a standstill. The countries would have to go, companies would have to go elsewhere. But that is, those are levels of tariffs that would really jeopardize that trading relationship. So we'll see what Trump's response is to China kind of digging in its heels. But it's a real showdown right now, and we'll see who blinks first. But there's a lot at stake, given it's about a $500-600 billion trading relationship.
And Wei, is this thinking that actually there's been a pretty blunt reaction from Beijing? So they seem to be intending to, of course, resist this pressure from the U.S. It means that in the short term we probably don't have a deal. But does it mean that the stakes are so high that there will be some kind of compromise in the medium term?
Yeah, so this is the near-term, medium-term kind of delicate balance that I was speaking to. In the short term, it's really hard to see uncertainty dissipating very, very quickly, which is why risk premium warrants a higher level, and which is why we are more kind of neutral towards equities than we are positive over the slightly longer term. But over the long term, our belief has been and remains to be that the pain in markets, the pain in economy will solicit some sort of response, and some sort of a deal and compromise could be struck, and which is why over the slightly longer term we believe that fundamentals would prevail, and the still okay earnings in global equities, but also specifically in U.S. equities, is why we are over the 12-month horizon still overweight, but right now we are over the 3-month horizon we're neutral. But it's really important, despite the headlines flying, that can be quite scary to stay invested, because it's at times like this extreme volatility that longer-term performance are built.
Brendan, do we have an idea of how many countries actually called up the White House to say, okay, we're ready to negotiate? And there's a problem of timeline. You probably don't have enough people in the trading ministry of the U.S. to be able to deal with all of this. It takes months, if not years.
Exactly. I mean, it takes, it can take 10 years to renegotiate a trade agreement. There would be dozens of countries calling. Japan has been mentioned as one where there will be a negotiation on track. But something else happened yesterday that, is probably not a good sign for countries trying to seek a deal. Israel did not get a break from its tariffs from the president, and when you look at a strategic ally like Israel, and they walked away empty-handed, that sort of sets the tone for all these others, that there's going to be it's going to be a long haul to try to get those tariffs unwound, if they can be at all, given the Trump administration needs the money as well.
So, Wei, how would you think about it? I know there's a pretty funky maths or algorithms in how they calculated the tariffs, and it doesn't make a difference whether you're you're a friend or a foe, because you look at the equation, that's what they want to apply, or that's the negotiating starting point. So, again, how does this end in 2-3 months?
Well, there are multiple pieces in terms of policy dimensions that we should consider. There is tariffs, which is what we're getting right now. But what is also on the table is tax cuts and deregulation. And unlike Trump 1.0, where we got the good bits that are good for markets first, and then tariffs came, we're getting the tariffs now. And then the tax cut and deregulation are further down the line, which is why markets are kind of feeling a bit nervous right now. The big picture is that we believe tariffs are both a negotiation but also a tax revenue, because to your point, the administration needs additional kind of income to try to close the fiscal gap or not spend as much. So ultimately we're looking at kind of a landing zone 15 roundabout, that sort of average tariffs across the board, which if the other pieces were to come through in a positive way, especially the deregulation piece and the tax cut piece, markets can still hold up. But until we get there, we're talking about a period of extreme uncertainty and hunkering down for markets. So not across the board, kind of buying into the dip right now, but our investors are eyeing opportunities in banks, for example, and tech that have been really beaten up when their fundamentals are fine.
Wait, if you look at the U.S. economy, is it already in a possible recession? Or is it given that actually it will go through a significant downturn? And what does it mean for Fed?
I would observe that the effect of tariffs is stagflationary. And if tariffs were to stay at these elevated levels, the opening gambit, then chances of a recession have increased. But we're also talking about this being kind of the starting point, but there could be walk back. But one thing I would note, if you look at yesterday's market reaction, 10-year yields, really interesting. Markets are going through extreme volatility, but 10-year yields, government bonds are not good ballast coming to the rescue of markets because of inflationary concern. So the Fed is not going to be able to come to the rescue of the economy as readily as they were able to before, and that could kind of make the economic situation even more kind of treacherous in the face of elevated tariffs.
And Brendan, I mean, there's no secret sauce, right, in how to negotiate with Donald Trump. I mean, you were mentioning Prime Minister Netanyahu. I've heard it all, like, Meloni should negotiate for Europe. We should do this. Carney has it right. Maybe we should look for how Mexico does it. Is there any insight into the Trump administration's thinking? I mean, they're saying outwardly that the markets are fine and they'll settle, but is there a sense of panic at all?
Well, the thing that the Trump administration officials have said over and over again is it's the trade deficit, and fix your trade gap with us, and we will, and that will make us think about lowering your tariffs. But the thing that I would keep an eye out on over the next several days is how China and the European Union respond to American companies in ways that don't involve tariffs. This is the time when the Chinese regulators regulators come knocking on the door of an American company and start causing problems. There are other ways other than tariffs that can disrupt American businesses abroad. The same thing with the European Union targeting a lot of big tech companies based in the U.S.
Yeah, and I guess you could argue that over the last 15, 20 years there has been big imbalances, but this is probably not the right way to fix the trade imbalances.
To your point about the funky way of coming up with the effective tariff rates, the goal is clearly both to kind of negotiate but also to bring down trade imbalances. But it's not just goods but services as well. And I think that's a piece to consider as we think about kind of in the coming days how the different responses could look like.
Thank you both for joining us. Bloomberg's Brendan Murray, who leads our trade coverage, and Wei Li, Global Chief Investment Strategist at Blackrock. Now, EU trade ministers have closed ranks and signaled readiness to use a range of countermeasures, including potential taxes on digital companies in response to President Trump's tariffs.
Everything is possible. Everything is possible. We have a wide toolbox, and everything is possible. And at the end of the day, we don't want to use it, but we can use it. And this is, I think, what was most consensual.
I hope Mr. Trump is smart enough to know that our economies are very much connected and that we depend on each other, and that tariffs are very bad for all of us.
I know that 27 are stronger than one, and so if we keep united like we do for the moment, I'm trustful that at the end of the day we'll find a good compromise.
Well, European trade ministers speaking to Bloomberg's Oliver Kirk as they met yesterday. Ollie joins us now from Brussels. So, Oliver, how much unity is there amongst the EU?
For the time being, Francine, the unity is still pretty strong in terms of the European approach to dealing with Donald Trump and the tariff response. We'll have to say that, as time goes on and the conversations get a little bit more tricky because there are different, obviously, agendas within the various different European countries, that could change. But for the time being, it's holding fairly strong. What you have right now from the European trade ministers yesterday was discussing two plans. There's Plan A, that is a negotiated outcome. That is what everybody in Europe basically would like to see. That is what everyone is basically praying for. But when you ask them, basically, does the Trump administration give any indication that they're willing to come to the negotiating table? Have you had any indication in the last few weeks? The answer is, if they're being honest, the answer is no. Do you have any idea what the Trump administration actually wants? Do you have an idea of what they mean by non-tariff barriers, the so-called monetary barriers to trade? They don't know exactly what the Trump administration would like to see change, and there's not a huge deal of communication, which takes us to Plan B. And Plan B is basically using not just tariff measures. We know that they've prepared already tariff measures, which will come into effect next week. That deals with the steel and aluminum, but basically non-tariff measures. We're talking about potential tax to services, different regulations on the U.S. tech companies. We're talking also about various other sort of sets of regulations that could make things more difficult for the United States. But for the time being, the Europeans are trying to buy as much time to create as much runway to negotiate with the United States at a point where, frankly, it doesn't seem that there's been a whole lot of contact or appetite to negotiate. That being said, the sort of trade Representative Šefčovič has said that there is not a sort of unlimited timeline, and at a certain point they will be forced to act. And again, as we've heard from all the trade ministers, all of the tools are on the table, so we'll have to see how things materialize over the next few days. I suspect the markets will have a certain say in how things go. We'll have to wait to see how that pans out.
Ollie, thanks so much. Oliver Kirk there in Brussels in front of that Commission building. Coming up, we'll discuss the impact of tariffs and the outlook for the real estate sector with Jonathan Goldstein, the chief executive of property investment firm Cain International. That's next, and this is Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Francine Lacqua here in London. And traders have boosted expectations for the Federal Reserve to cut rates this year. It's usually a welcome news for the real estate industry. But the recent moves have also been spurred by President Trump's sweeping tariffs, which of course threaten to boost costs and weigh on profits. And real estate is especially vulnerable because of the many kinds of materials that they need to be imported. So let's discuss the outlook with Jonathan Goldstein, the chief executive of Cain International. The firm operates in the UK, Europe, the US, and manages more than $17 billion in assets. Jonathan, thank you so much for joining us. I mean, it's, when we we booked this interview, we didn't know that we were in the midst of a tariff global trade war. What does it mean for real estate markets in Europe?
Look, clearly it's early days. The markets have reacted very badly to the announcements from President Trump last week. And I think the big question that the world's looking for is what is the outcome that the Americans are seeking? Are they seeking for a protectionist environment or a free trade environment? And where that ends up will very much signal the impact it has, not just on real estate, but across many, many industries. So I think people are watching day by day to see how negotiations are taking place with other countries and whether they are negotiations or whether or not the tariff board that we saw last week is what we're going to end up with. I very much believe we'll end up in negotiated positions because I think that's the pragmatic policies that I think the administration will ultimately follow. But clearly the markets are nervous and spooked in the event that that goes a different way.
Yeah, I mean, since 2022, there was a clear trend, right? It's like property yields were higher, you know, you had a fairly benign operating fundamentals and rising rates. Is there a risk that all of that could be reversed quite suddenly, or would it take time?
No, I think that the uncertainty creates two scenarios. First, it creates opportunity. You know, real estate has often been an asset class that people have run to for refuge because they see long-term value in a stable environment, countering, you know, a balance against inflation, provided you've got the right quality. So I think that we're seeing this as an opportunity now to look around the marketplace. You know, clearly there's been a significant reaction over the course of the last 4 or 5 days, and some might think it may be an overreaction to what they're hearing. And I think that what one needs to do is look through the story and try and see if there's opportunity that comes through. And with some of the quality assets that we both own and develop, in some senses, I feel more confident about those coming out of this because I think there's always a flight to quality when people see the turmoil that they've been seeing in the last week.
Jonathan, you talk about finding value. Where would you find that? Is there like a specific region or assets that you would like?
I think you have to look across the sectors, the markets that people need and people rely upon. So I think, you know, we've invested a significant amount in the luxury end of the sector, and we continue to see that as a growth sector. But it's also in the assets that people need to service their lives, be it the industrial, the logistics. You know, we see that as a considerable growth opportunity still, provided that, of course, there is a level of stability that comes out from this, both, you know, in the US, but obviously reaching out, as you were listening to with your correspondent before, in Europe, but also into the UK as well.
Jonathan, where do you see, in terms of segments of the markets, the ones that are most exposed or most protected?
Well, I think the most protected are those with quality and locations. I've always felt that the most nervous aspects are those where you're investing in areas which are not prime locations.
But commercial, or does it commercial or holidays?
Well, the secondary office space has always been an area for the last since the pandemic, which has really suffered because people want a flight to quality. People want to invite people back to their offices and see quality in it, just like we've got in the Bloomberg studios here. So I think that's always been the area that people have been nervous about. And if you've seen across America, swathes of portfolios being handed back to banks over the course of the last few years because there are no takers for these places.
What happens to the logistics business?
Well, I think, again, it comes back to supply and demand, and it comes back to the issue of tariffs and how goods move freely around the world. So in some senses, it's very difficult to call at this point in time. But ultimately, you have to believe that the progress that we've seen, the online changes that we've seen, the data centers that we've seen growing, that is a trend that will continue, notwithstanding the noise that we're seeing in the short term from America. I don't think that the noise that we're seeing is going to push trends back decades. So I think we've just got to stay firm to what we've seen as the growth areas, what we know to be the changes in society, and build assets from real estate which meet those needs.
Jonathan, you're also passionate, Brit. I know you're at times frustrated about some of the taxes or the lack of, I guess, incentives for entrepreneurship in this country. Where are we at now?
Well, look, I've been very encouraged by the new government as a generality. I think, the Prime Minister has made great moves on the world stage, and he should be commended for that. And if you look at one act he's taken that I think he could be the bellwether for the future of the government, would be the removal of NHS England. Because it was a bold step. It was a big move to put a line through, Trumpian, some would say, in certain acts, in terms of just removing a layer of regulation. But what I think we need to see is we need to see that reflected within the business world. We need to understand that we're operating on a very, very big canvas. And really what we are competing for is the hunt for talent. We need to attract the best talent to this country. And I am concerned, as you referred to in your question, that some of the taxation policies that were started by the Conservatives in the last administration but continued by Labour are driving people out of this country. And I think that we need that talent, because when that talent migrates elsewhere, Britain ceases to be front of mind. And when you see Italy, for example, being a net beneficiary from the migration of talent from the UK, that is not a good thing. And we really need to address it in short order, because whilst we may have lost some people, A, we can attract them back, and B, we can ensure that we don't lose further. That, to me, is the single most important thing.
Jonathan, you've also been a co-owner of Chelsea Football Club for 3 years, and right from the start you said that you wanted a new stadium. It's taking a long time. Where are we?
Well, I mean, look, development in London is very complicated. It's a long-term game, and the shareholders have continued to analyse the options ahead of them, and we're hopeful that in the short term that a decision will be made that we'll be able to bring back to the supporter base and then bring back to the wider British public and show them the vision for the next 100 years of Chelsea Football Club.
Is there a danger that Chelsea is being allowed to drift and actually just won't have the same facilities that some of the other clubs?
No, I don't think so. I think that if you look at the training facilities, the way we're attracting players, I think if you look at the way that the women's team has developed, the women's team's in the semi-final of the Champions League, is leading the Women's Premier League by some distance, and we're very proud of the achievements. And the men's team's also had a very, very solid season, and with 7 games to go, is in a great position, to fulfil potential during the course of this year. So I don't think there's that worry, but I do think that we do need to ensure that there's a long-term vision which everybody can sign up to.
Should there have been a clear alignment with Clear Lake right from the start on intentions for a stadium?
No, I think, look, if you look at the number of decisions that have been made between the two groups over the course of the last 3 years, almost 3 years, you can see significant alignment around a huge percentage of decisions. But there's a very big one out there, and Todd and others have made it clear that we need to ensure that we get alignment for those decisions, and I'm sure that will happen.
Is it still fun being in football? I mean, this is part of the the best of what the UK can give to the world.
Being involved in sport is great. We've recently got involved in the cricket world as well. We bought one of the franchises in the 100, which we bought a percentage of the Trent Rockets, which starts this summer. I think we see these as great growth opportunities, and we'll continue to dig in and hopefully expand the opportunities in those sports, both for the fans but also from an investment case.
Jonathan, thank you so much for joining us. That was Jonathan Goldstein, the Chief Executive of Cain International. Now, coming up, we'll speak to the Hungarian Foreign Minister, Péter, Szijjarto, as a country argues against EU counter-tariffs on the U.S. That exclusive conversation is up next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Markets bounce back, investors remain on edge as the U.S. president sends mixed signals on the potential for tariff relief. China says it will fight the trade war to the end after Donald Trump threatens to raise its tariffs to more than 100%. And the EU proposes a 25% levy on a selection of U.S. goods, but American whiskey is spared. Well, shortly we'll be joined by the Hungarian foreign minister for an exclusive conversation. And Donald Trump's trade war is really reshaping the global order and roiling markets. Now, the new tariffs may provoke traditional partners to explore new alliances and develop deeper trade relations that exclude the U.S. Now, for more on all of this, let's bring in Ross Matheson, our EMEA news director. So, Ross, there's been so much turmoil and so much talk. Where do things stand right now?
Well, we're up against April 9, so we'll find out very soon whether Trump does make good on these reciprocal tariffs. So far overnight, he was sounding pretty resolute on that front. So then these things will take effect. And as you say, the key is how do countries react? And they're all reacting in slightly different ways. We know China, for example, has come out pretty hard with retaliation, and that relationship is deteriorating pretty quickly. The EU, for example, is preparing and announcing what they will do, which is a bit of middle of the road response, leaving room for negotiations. And other countries like Japan and Israel are moving quickly to try and have talks with mixed results for either side. I mean, the confusion here really is that Donald Trump is not just talking about tariffs. He's talking about non-tariff barriers being part of these conversations. And non-tariff barriers can mean essentially anything. And it's a bit unclear exactly what that does mean in Donald Trump's mind. And is it different things for different countries? So if you're a company or a country or a lobby group trying to work out how you liaise with the White House on this, it's very difficult to know your starting points. And so that's the difficulty that we're at in the very near term. Beyond that, as you say, this is rapidly reshaping relationships between the US and long-held allies, between the US and countries it's long had tensions with, but also countries with each other. I mean, the European countries are constantly talking to each other, working out what to do, but does it open the door to the EU having a different kind of relationship with China? Again, for example, do developing countries really band together further on this?
Roz, meanwhile, President Trump also says the U.S. is holding direct talks with Iran on its nuclear program, with the next round taking place on Saturday. Here he is.
We're having direct talks with Iran, and they've started. It'll go on Saturday. We have a very big meeting, and we'll see what can happen. And I think everybody agrees that doing a deal would be preferable to doing the obvious.
Ross, how significant is it?
Well, it's quite significant. The location is also symbolic, being Oman, where, of course, deals have been done before between the US and Iran. The fact it's just US and Iran is interesting. There's no sign of Europe in any of this, although, of course, the US is a key player in all of this. And the question about whether they're direct or indirect talks, we know there's going to be senior officials from Iran and the US, both in Oman. Are they sitting in the same room together, or are they passing notes through Oman officials as sort of intermediaries? But obviously the question is, what is the purpose of these talks? Is it to get some kind of conversation back towards a nuclear deal? We know that Donald Trump has been putting pressure on Iran and its proxies. Is it to show that talks would go nowhere? You know, he's been talking about beefing up the military presence in the region. Oh, is this just a chance to take a little bit of short-term pressure off the table? I don't think anyone's expecting a fulsome deal to come from this conversation, but at least the fact that they're going to be in proximity to each other does give that opportunity for at least a little bit of short-term lessening of tension.
Ross, thanks so much. Ross Matheson there, our EMEA News Director. Now, Hungary says it does not support the European Commission's plans for counter-tariffs against the U.S. Now, the country's foreign minister says retaliatory levies would lead to higher prices in the EU. Hungary has also been at odds with the EU on support for Ukraine, and it's planning to quit the International Criminal Court. Well, joining us now for a wide-ranging, exclusive conversation, we're joined by the Hungarian foreign minister. He's, of course, Péter Szijjarto. I'm excited to speak to you, Minister. We've been waiting for this interview for a bit of time now. You blame the EU for failing to negotiate exemptions with Donald Trump. How would you do it differently?
Good morning. Thank you so much for the invitation. It's an honor to be here with Bloomberg. So actually, since November, everyone knew that the U.S. citizens have elected a president who would carry out a very patriotic kind of political strategy, including economic strategy. Everybody knew President Trump had tariffs in his toolkit, so it was obvious that at some point of time this would come. And that's why we have encouraged the European Commission for a while to enter into negotiations with President Trump or with his team, his administration, about how to avoid a kind of trade war or a tariff war between the European Union and the US. And we had a concrete proposal, which we have put on the table of the Commission, which would have been the following. We all know that the backbone of both economies, US and the European economy, is the automotive industry. It is very sensitive what happens to the automotive industry because it has a huge impact on both continental economies. And we all knew that US used to implement and apply a 2.5% tariff on automotive imports from Europe, while European Union used to or has been applying a 10% tariff on the same. So 2.5 against 10. So we have proposed to the European Commission to make a unilateral step to decrease the tariffs on automotive imports from US to European Union to 2.5%. We would have been on an even level level, and I do believe that would have meant a good platform to start negotiations from. We should have tried that, and I really regret that we did not.
Yeah. So, Minister, are you planning to talk to Trump on Europe's behalf? And I guess the question on the cars, although I don't want to spend too much time on this, is that we're just not importing enough U.S. cars. So even if the trade balance would still be there, even if you take away or get down some of the tariffs on them?
Well, I really do believe that even tariffs would have created a good platform for negotiations and would have shown goodwill. And this goodwill would have been able to lead to a different kind of situation compared to where we are now. Well, negotiating on behalf of the European Union, definitely we don't have the authorization for. It's the European Commission which should do it or should have done it. But I have to tell you that, regrettably enough, these kind of challenging times show very clearly that the institutions in Brussels are not able to lead. They are not able to come to solutions which would be beneficial for the European Union, for the European people. Unfortunately, this has been not the first crisis when this has been proved. That was the same with COVID, that was the same with migration, that has been the same with the war in Ukraine, that the European institutions simply are not able to lead and are not able to come to a right solution.
But, Minister, so are you open to bilateral negotiations with the U.S. on these tariffs, or is it still the remit of the EU to handle this collectively? And how are you collaborating with them to try and mitigate some of the effects?
Well, you know that there are regulations in the European Union which make it very clearly that the policies on tariffs is a so-called community competence, so that comes with the European Commission. But we have been holding talks with the United States for a couple of months now about a special bilateral cooperation. You know, we are on very good terms with the Trump administration. We have been crossing fingers for President Trump to win the presidential elections, which he did, thanks God. So we are negotiating about a bilateral cooperation framework, which includes economic elements as well.
Minister, I mean, you know, to our surprise, he didn't give a better deal to Israel, who's some of his closest allies. So this looks like it's really hard numbers. Do you see these U.S. tariffs as part of a broader global trend of protectionism?
Well, I understand that, you know, President Trump has been carrying out a very patriotic kind of strategy, and economy is part of that. So he says America first. Everybody knew that he would apply such kind of measures as well. You know, the Israeli Prime Minister paid a visit to Hungary in the recent days. From Budapest, he flew directly to Washington, and I have talked to him a couple hours before he left Budapest, and he told me that he would have conversations with the President Trump on that matter as well, which I understood he spoke about yesterday in the White House.
Yeah, you have a good relationship with the U.S., but at the same time, the U.S. partly blames corruption, the Hungarian public procurement in its official reasoning for the EU tariffs, right? So that's something that I think we need to remember. Does it make you disappointed in the U.S. in light of what, you know, President Trump has been saying?
Well, actually, thank you for raising this issue, because there have been fake news spread yesterday around this issue. So we are speaking about an annual report of the USTR, the U.S. Trade Representative. This report has been written last year because the deadline for the remarks expired in October, so well under the Biden administration, where we all know that the Biden administration looked at Hungary in a very hostile manner. We know that this report is being put together based on the substantial information provided by the U.S. embassies. It is written in the report. And you know that the former U.S. ambassador under the Biden administration used to be a person who was very hostile to us. He was basically a political activist in Budapest. He was leading the Hungarian opposition, actually, commented domestic issues on a daily basis, criticizing the government 24/7. So actually, we see his sentences there. So we are pretty sure that the next report, which is going to be written by this administration already, will be totally different.
Minister, I also want to ask you about Chinese investments, because you welcome China, also their soft power influence. Is that a point of tension with the Trump administration?
Look, I have to tell you that I have been in this position for almost 11 years now. So I've been dealing with China and economic cooperation with China for 11 years. China is now a top investor in Hungary. 17 billion euros of investments, mostly in the automotive industry, are going on in Hungary by Chinese companies. 2020, 23, 24, in these 3 years, Chinese investors invested the most in Hungary. But I can tell you one thing for sure. Never ever they have confused any political issue with the investments. They have never put together any kind of political expectation to these investments.
So you don't have to choose?
No, actually not, because our strategy is very clear. This is the economic neutrality, which means that we are open for investments from the East and from the West as well. So if you look at the top 3 investors in Hungary, it's Germany, China, and the United States. 1 European, 1 American, and 1 Asian. So we are very, let's say, very balanced in this regard. And one more sentence, if you allow me, when it comes to Chinese investments. We are now becoming number 2 in the world when it comes to the production of electric batteries because of the Chinese investments. But why the Chinese investments have picked Hungary in Europe, why 44% of all Chinese investments heading Europe came to Hungary is because of the Germans. And I tell you why, because besides Germany, we are the only country in Europe to be hosting all 3 German premium car makers. And they are all working together with Chinese suppliers. So if you look at Hungary, you see big German factories and big Chinese factories built next to each other.
Minister, I have many questions also on Russia.
Please.
I think you visited Russia at least 13 times since the start of the full-scale invasion of Ukraine, more than any other EU foreign minister. What is the purpose of such visits?
Well, I wish others had done the same, because I do understand that the only way out of this war comes through negotiations. And we are very thankful to President Trump that the current administration has started these negotiations finally, because this war does not have any kind of solution on the battlefield. That has been proved already. So if you don't have a solution on the battlefield, you must have a solution around the negotiating table. And thanks to President Trump, these negotiations have been going on. We have a very important cooperation with Russia when it comes to energy. Yeah. Why? Not because of political reasons, but because of physics and infrastructure. So we cannot cut ourselves from Russian energy sources, because physically speaking, we would not be able to supply the country. We are a landlocked one. So we depend on our neighbors. And since our neighbors have not made their infrastructural investments and projects, we are mostly dependent on sources from Russia. Russia has been a reliable partner so far when it comes to energy deliveries. No one gave us a better offer so far. No one gave us a more reliable and cheaper offer than offered by Russia. So obviously we are in connection with them. We are in a fair cooperation with them when it comes to energy, and we cannot give it up under the current circumstances.
And Minister, we don't really know exactly what happens next, but would you support the next renewal of EU sanctions on Russia when it comes due next year?
Well, first
Actually,
of all,
at the end of this year.
Yeah. Well, generally speaking, I think that the policy of European Union based on sanctions has failed. Why? Because these sanctions have hit European economy more than the Russian economy. This is number one. Number two, of course, our decision will depend a lot about the, let's say, geopolitical circumstances. We see how successful U.S. and President Trump personally will be until the next decision, and we will, make our decision judging the actual circumstances at that time.
Minister, do you believe Russia really wants peace?
Well, I do hope that both parties at war want peace, but what I really know is that President Trump and his team is committed to make peace, and I think this is really great news. Secretary Rubio made it very clear at the end of last week during the NATO Foreign Ministerial that they don't give up their commitment. They are committed to make peace. They are committed to negotiate with both parties, and I think that the world has become a safer place in the last couple weeks just because of these negotiations. Because although we don't know whether peace is going to be made on a short term or medium range or long term, but what we know is that the risk of escalation of the war by the fact that the Russians and the Americans are in direct negotiations has been decreased. And this is good news for us, a country which has been in the neighborhood for 3 years of a war.
Minister, could you explain? I mean, Budapest has also tried to leave some sanctions on certain Russian individuals, for example, the sister of Usmanov.
Yeah.
What's the reason behind that?
Well, simply rationality and simply legal approach. So I think that these sanctions have been challenging the seriousness of the European Union as well. So if you put persons on a sanction list without any kind of real reasoning just because, then it ruins your seriousness. So we wanted to save the seriousness. So no, I think those are legally not based decisions, and those decisions which are legally not based, we usually don't support.
Minister, maybe a final question on the rule of law and the International Court of Justice. You've often clashed with the European Union, Brussels, on issues such as migration and judicial reforms. With Hungary now, withdrawing from the ICC, does that deepen the divide with Europe?
Well, you know that we have been in office for 15 years now, and we are a very characteristically right-wing government, Christian Democrat, patriotic political strategy, sovereignist. And this is not something that would be digestible by the European Commission. So for the last 15 years, there are always political debates, because when it comes to big issues like the illegal migration or LGBT issues or the war itself, our approach is totally different than the approach of Brussels. So that's why we are under continuous attacks. But these attacks are being shown as if they were around the rule of law, which has nothing to do with the rule of law. This is politics. This is politics. When it comes to
ICC,
yeah, on ICC it was on ICC there was a very concrete issue that actually ICC became a political institution or a political body, and a court cannot become a political body. And the fact that they issued a warrant on the Prime Minister of the State of Israel, that was a very clearly politically motivated step. And we don't want to be part of a so-called court which bases its operation on political basis. This is no-go for us. That's why we decided to leave.
But are you firmly committed to staying in the Union?
Of course. You mean European Union? Yes. No question, obviously.
There's no question. Like, there's not a point where you say actually. No.
Of course, we look at ourselves as being members of the European Union in the future as well. Although we would like to reach some reforms in the European Union, because currently the competitiveness of European Union, the strength of European Union is very low. So we would like to improve the strength and the competitiveness of the European Union. You know, there's a big debate, because many think that European Union should be a superstate, a federalistic superstate directed by and from Brussels. We see it differently. We think that the European Union should be an integration of strong countries, of strong member states, which are sticking to their history, their specificities, and so on and so on, religion and so on and so on. And this is a big clash. So we see European Union in the future as a strong union based on strong member states. And here we differ when it comes to, the concept with Brussels.
Minister, thank you so much for joining us. The Hungarian Foreign Minister Péter Szijjarto. Now, coming up, we'll be joined by Bhandari from Neuberger, Berman, to dig into the fallout from Donald Trump's tariffs. This is Bloomberg. Now, Citadel founder Ken Griffin is the latest Wall Street titan to criticize President Trump's tariffs, calling them a huge policy mistake. Well, joining us now, Bhandari, Chief Investment Officer for EMEA Multi-Asset Strategist at Neuberger Berman, and Alan Wong, Bloomberg's China Economy and Government Editor. Alan, let's just kick off with you, because there's been a huge pushback, actually, from China. I mean, they feel like, they're the ones with the blueprint on how to fight back. Does this escalate, or does the U.S. actually get scared and back down with some of the China initiatives?
Yeah, China certainly is trying to project a very brave face after Trump threatened to increase 50% tariffs on Chinese imports. China earlier today, said that it will hit back until the end, and that Trump's threat is a mistake on top of a mistake. So China hasn't said what it will do in response to Trump's tariffs if they do come through. But we've heard some suggestions from some influential commentators in China suggesting that China will hit back and will resort to more targeted measures to hit Trump where it hurts.
So what can China possibly do if Trump actually follows through, Alan, something that would be significant and people would take notice of?
Yeah, so these are not verified or official announcements, but these two bloggers made a big splash on the Chinese internet, which is now trending, suggesting that China could put more tariffs on the imports of U.S. farm products such as soybeans and sorghum. And other than that, they suggested that China could hit the U.S. services sector, which actually runs a trade surplus with China. And in addition to that, they also suggested that China could ban the screenings of Hollywood movies in China, which, as you know, China controls what movies can be imported into the country and what cannot. Oh. So those measures, once again, they're unverified, but has been floated and is being circulated widely on the Chinese internet.
Alan, thank you so much. Maya, first of all, congratulations on the new job. I've been missing you on TV, but you started right when the world seems to be falling apart. Like, how do you do this tariffs, and what does it mean for just investment overall?
Well, I think there are maybe 2 or 3 things to say on the tariffs. I mean, I think first that what was announced last Wednesday, I think, was pretty close to the worst case that we at Neuberger, Berman, and I think others were expecting. And look, Francine, they're hugely disruptive and do represent a shift in the world order. We've gone from 2.5% at the start of the year to 7% a week ago to somewhere between 20 and 26% right now. And partly for that reason, we don't expect the tariffs that have been announced to actually be what's ultimately implemented. So I think that's the first thing to say. And amidst all of this, there's clearly been an uncertainty shock, if you will, to the U.S. economy. And we have, at Neuberger Berman, downgraded our growth expectations. So we expect sub 1% growth, 0.5 to 1%. And inflation is higher. So we're now expecting 3.5% inflation. And I'd say, broadly, the risks are to the upside to inflation and the downside to growth.
So for the Fed, what does that mean, Maya? I mean, I guess everything depends on the Fed and how many times they cut and whether we see an emergency meeting which could sow more panic on the markets.
Look, I think, Francine, the Fed is ultimately led by financial conditions and how financial conditions behave. Now, I think until really yesterday, you would have said, well, financial conditions have tightened, but bond markets remain pretty orderly. Yesterday was a bit of a shift in that. And, if we cast our minds back to the final quarter of 2018, just before the infamous pivot, we had a similar situation in that we had, bond yields rising in October, then real yields in November, and credit spreads in December. Until yesterday, all we'd really seen was credit spreads widening. I think if this bond market route has legs, if you will, then that strengthens the case for the Fed to respond. But it's got weaker growth and stickier inflation, so it's not an easy spot. And we're not in the camp, at least at the moment, of 5 cuts this year. We'd be erring towards less cuts.
So is volatility a given, or are we going to see more of a correction?
I'd say, volatility, I think, is something we expect to stay. Now, we've clearly had huge moves in markets. I mean, last week's moves in U.S. equities were like a 10 standard deviation event. But look, we're not turning positive on U.S. equities just yet because there's still a lot we don't know. We don't know how other countries are going to respond. We don't know how companies are going to take all of this on. And earnings season is going to be really important in all of that. So, I mean, things that we've done in portfalios at Neuberger, we've nibbled into gold. That's an asset we like last week.
Question mark.
Treasuries. We've had a long bias towards bonds, but we've clipped that back as well, and are looking at some of the areas that have been collateral damage in a way. JGBs, for example. Some of the banks in Europe and Japan look quite interesting, but we haven't actually pulled the trigger just yet.
Maya, I was going to ask you. I mean, there's a bit of a turnaround, a tiny turnaround in the markets today. Yeah. Is that dip buying, or is it wait and see?
I mean, I think it's just sort of short-term moves. I mean, I think what we saw yesterday just reflected how eager markets are for some positive resolution. I mean, that 15-minute rally we saw on hope for resolution was quite something. And so, yes, I think there are positive hopes. We think that ultimately we will have a negotiated outcome, but there still is, I would say, a fat left tail. It's no longer fattening at the same pace as last week, but it's still fat.
Maya, thank you so much. Great to have you back on TV. Maya Bhandari there from Neuberger, Berman, and Alan Wong previously on talking about China. Up next, a Bloomberg Brief, and this is Bloomberg.